Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman, and for the first time ever, I'm here with Michael Tanguma, the founder and CEO of Onramp Bitcoin. Michael, welcome. Thanks for your time. I can't believe you're finally here. It's May 1st. We've been doing this stuff for a while now, and glad to have you on the program.
Yeah, it's been an exciting ride since we first connected. We just finished a few hours ago ripping a great pod with Tad Smith on the last trade. And he had referenced you guys' first meeting back in November 5th. And I think that's what kind of put everyone on the radar to him and I think your podcast as well. And then shortly after we got connected, and it's been a wild ride since. And it feels like it's just getting started.
Absolutely. Yeah, we were chatting on the podcast about none other than strategy, MSTR, and whether they would decide to re-up their $21 billion ATM. And we now know that they're doing that, but they're doing twice the program. So I guess they're probably talking right now about the 42-42 plan, $84 billion total. As someone in the office just said to me before I walked into the studio, he said, well, it's boom or bust now, baby. And I said, boom, baby. Right? I don't know what else to say.
Tim had a pretty wild premonition. He called it on there, and we all kind of looked around, and it looks like it directionally that was the right number. It's pretty crazy. I don't know if there's enough Bitcoin for everyone. And again, everything's just getting started. Specifically on the corporate treasury, we know of no shortage of companies kind of trying to go public with this strategy. There's an announcement recently with Metaplanet coming to the U.S. and then 21. So it looks like this will be the standard ultimately over time. And what does that mean for a currency that only has 21 million hard cap supply is pretty exciting to think about.
Yeah. And it seems pretty apparent by now that, of course, things can change, and I can't speak for any management team. I can barely speak for myself half the time. But anytime that the MNAV, as we like to call it, is above 1, right, these companies are kind of just turning on that ATM and issuing additional shares and buying Bitcoin. And if the price is at your back at all, which is kind of a interesting flywheel, and in the opposite, not really a doom loop, right? If you're below 1x, maybe there's an opportunity there too. But it's just, definitely interesting times.
Yeah, Tad had a pretty prudent, tempered take on, just understanding liquidity cycles and markets and recognizing that there's going to get some froth in the system. But ultimately, ahead of that, the amount of awareness that this is going to bring to Bitcoin, I know that's something you're passionate about, is super exciting. When you think about for the past 15 years, the fever pitch that's come down the market has been related to ICOs, crypto. There's always like a new kind of thing that comes about. And this is, obviously not direct spot exposure, but it's as close as you're going to get outside of, straight ETF, and ETFs are only going to be so exciting. But when you add the profile of the firm, they each have their own unique kind of vibes, as we were talking about it earlier, their profile of a business, who represents them, right? With the 21, with a few notable characters in the space. It's going to bring a lot of awareness, and ultimately people are going to wonder what's going on. What is this thing Bitcoin? And that naturally leads them to figure out, most people, you'd be shocked, and individuals listening to this, most individuals do not know that there's only 21 million Bitcoin.
Yeah. I was talking to someone earlier today, actually, when the announcement came out, and I sent him a message and said, hey, looks like at first it looked like another $21 billion ATM. And they said, they should probably pay a dividend, right? Give something back to the shareholder. And I said, well, actually, they do have Strike and Strife preferred shares now that do pay a dividend. So even focusing on this 12 hours a day, 16 hours a day, I think I went to bed at 3 a.m. and then I was texting you at 7 my time, 6 your time. I mean, even being in it as much as we're in it, it's a full-time job to keep up. And anyone that's not really focused on it, it's not surprising to me that there's people in the space that are not up to date. I mean, this is one stock. Even an analyst, right? Like a TradFi analyst is working 40 or 50 or 100 stocks or whatever they're doing. I mean, it's just very fast moving and pretty intricate if you're not really focused on it?
It's 24/7, 7 days a week. So that's always going to be maybe a little point of contention or friction when it comes to Wall Street and TradFi coming in because of the volatility mixed with the time up in the market. But then the other side of it, as you related to, is this notion of the thing that a lot of people coming in, they think of Bitcoin as an asset, maybe akin to like a stock or bond, but it's fundamentally different, and it's more akin to money. Once you learn more about it, and what money requires is financial services. But then you take that a step further, and at the end of the day, financial services are relationship driven, and relationships are local. And so that was very astute. And I don't know if that was the direct thinking, but when you think of David Bailey going out, and I feel like he's one of the main individuals pioneering or starting outside of Saylor on the corporate strategy, but realizing that every market's going to need this. And so the Japanese market, given their macro tailwinds, were a prime market to execute on this strategy. And so to your point about hard to keep up, it's going to get even harder because you're going to have Latin America, Asia Pacific, you're going to have Middle East, Europe, just across the world. We obviously know North America is leading the charge here, but it's a super exciting time for us. And then obviously for people that want to get in the space, there's different niches that are going to get carved out because money touches everything. And I think that's something people don't really fully grasp until you get in the driver's seat of doing something like you're building this business, that there's no shortage of opportunities. And I feel like you've really captured that. And we see you on the road feels like every week at this point. One of the hardest working men in Bitcoin.
It was funny and made a lot of sense. Someone made that, I think it was before we started rolling on the last trade pod today. Someone just said, Tim's on the move. He's always on the move. And I was glad to be able to make the joke that I was in the back of a cab and not in a bad circumstance. But do you have any take on the announcements that have come out around 21 Capital as far as Cantor, SoftBank, Tether, with Jack Mallers at the helm? I've heard at least two theories, and to be fair, at least one of them, the guy said, look, I haven't done a lot of research. This is just kind of what came to mind. The one theory was that Strike, right, Mahler's company that he's been running, might get somehow rolled up in there and be a product or service, right, be the operating company within 21. And then the other, which, the financials were made public, I think, for the first time right around that same time. So that was maybe an interesting coincidence, or maybe it's foretelling that sort of theory. And then the other theory was that they were actually going to make Bitcoin treasuries as a service, like to other public companies, like that was actually going to be the operating business, which I have not heard anything in the market about. So I'm just curious what your take on the whole thing is and where it could go, because it seems like either I'm not understanding it because I'm not that bright, or there's just a lot of moving pieces and maybe not a lot of clear communication about everything yet.
Yeah, I mean, I think there's probably a multitude of factors happening. One is things are getting stood up. Being careful, being in the industry, there's a lot of intimate knowledge, known. So just speaking in generalities, there's been large TradFi firms that have launched products around lending that maybe weren't fully baked out. So you get the announcement, and then you got to figure it out. And so what you reference without any inside knowledge feels like a confluence of getting ahead of the vibes and getting out in the market while figuring out the strategy around, to your point, what is the business strategy outside of just accumulation of BTC. But then I think at the end of the day, and we talked about this, there's only so much kind of advantages or things you can really structure in your way if you're starting a business like this that is solely focused on accumulating Bitcoin. So in my mind, and it's kind of like a joke, but it's like it comes down to like the vibes. Like it comes down to, it's the same thing that we talked with Tad about his journey and understanding scarcity and being at Sotheby's, and then very similar with public equities. We all know that they trade at different multiples to what their underlying value is. And so I think it's an understanding that if you're going to do this strategy, you got to find your niche, and you got to find who's going to be the spokesperson. You got to figure out who are the big names around it, and they got some of the biggest. So I think that would make sense. Now, that strategy you said, even if it was the model, I don't see it like necessarily working. It would just be from a marketing standpoint, because there's some of the best firms on the planet Earth that know how people to execute on this strategy. They're already, doing that. And then the nominal amount of like dollar liquidity or revenue would not influence to really, exercise that like or execute on that strategy. So at the end of the day, I think it ends up being more marketing. But I will say what's most interesting, at least personally, is there's a lot happening from east and west when you think about, Russia, China, the Middle East, what's going on with Binance recently, and Abu Dhabi sovereign wealth fund taking a stake, and then you kind of have in the West Tether getting more involved, and Tether's you know influence in the U.S. is starting to become greater and greater. Obviously, there's a Canada relationship, but then they also effectively print dollars, right, based on their business model. And so there really is something interesting about they kind of effectively print dollars or BTC because they buy BTC with those dollars, and then being able to inject them in this capital market structure, get equities into the US base, be able to leverage that in other financial engineering. And I'm not very savvy on this, but it's my understanding that MicroStrategy's reflexive model has them always kind of purchasing at the top. And it was my understanding that on this 21 PDF, it was talking about being able to buy Bitcoin at, not discounted, but like other rates that are not traditional. Like you're able to stack BTC lower, which is not intuitive because usually the liquidity profile from the bonds or equity at the money market, at the ATMs, are higher subscribed when the price is higher. So that has MicroStrategy always, top ticking, where because they're always in this market of bonds, BTC with Tether, that they can actually accrete more BTC at lower rates. So I think that's kind of interesting from that. But I don't know, like part of the story we'll talk about on myself is I work at WeWork and have, familiarity with SoftBank as everyone does. And they're pretty loud and kind of, to your point, go boom. Sometimes they can really go boom in the sense of blowing up. So it's going to be interesting no matter what.
Yeah. Can you walk us through a little bit of your story, your journey to Bitcoin and to founding Onramp? And then maybe we'll get into the big announcement.
Yeah, for sure. Haven't talked a lot about this. I've been building for a while in this space. The thing that's most interesting, I would say, on my side, and it relates to building this business because we're building it for individuals that have gone down this journey that most people listening here is I had a traditional technology background. So I was in like SaaS-based sales, ended up at Google shortly after, and then randomly ended up in New York City. So from Texas, went to New York and ended up in 2017, right before the $4 billion SoftBank injection into WeWork, getting hired by Adam Newman on the enterprise side of the business to go scale that. And so the story that I tell is as I was going down, so the price of Bitcoin is running. So I'm sitting in meetings, looking in like loading up Gemini accounts and, buying, Bitcoin and Ethereum at the time. I was lighting money on fire at WeWork, right? So we're kind of, everyone knows the story of WeWork. And so the joke is like I was learning about money while I was lighting money on fire because I was reading the Bitcoin Standard. And we talked about this a little bit earlier today, but I had a similar background to Ted Smith in that I had worked for a high-end auction company like in college, and I just saw kind of everything under the sun when it comes to what's valuable and what's not. And also just growing up was very close to like scarce assets when you think about baseball cards, just different things that have like value that you would collect. And so the second I heard about 21 million, I was like, oh crap, like that's exciting because if everyone's already feverish about it and there's only 21, that means it has some value. Now let's start to figure it out. So I had about a 4-week period where it was altcoins and BTC. And then I was like, what am I doing here? Like everything can't have value. So I was able to get out of that altcoin trade by, that was January, and really never looked back since. I was going down the rabbit hole in 2018. And as one does, and a lot of your listeners do and yourself, once you see this trade, it's a one-way direction from your own personal capital, but then ultimately your intellectual capital and your professional life if you go far enough. And so I was looking around, but in 2018, there's roughly nothing that exists in the market that is not a scam. This is ICO craze at its peak. There's very few Bitcoin firms. And so during that process, I had built a material position for myself in Bitcoin and knew I needed to get it off an exchange. I came from, back in the day, and it's still the same somewhat, but definitely in 18, like not your keys, not your coins. It was just, you can't leave it on a third party exchange. There was all the knowledge of whether it was Bitfinex hack, the obviously Mt. Gox was there, but there was no shortage of things blowing up. In 2018, Quadriga, I think, happened. It was either 18 or 19. And Quadriga was a Canadian exchange where the guy literally faked his death and moved to Canada and said he lost all the Bitcoin. So this is just like a trope that was built in real fundamentals. And So I had all this, capital sitting on Gemini, and you needed to take it off, but I also didn't feel comfortable sitting on a plastic hardware device alone on an island. And so through that led me to there's a few collaborative custody providers out there. They focus on custody. It's kind of this really nice hybrid model between you're alone on an island, but also you don't have to trust a third party exchange. At the time, it was only Unchained and Casa. I happened to gravitate towards Unchained because they were Texas based. I was from Texas, and ultimately became good friends with that team. Leveraged the solution, and then they were kind of recruiting me eventually. If you ever come back to Texas, you should join. And so fast forward, I got lucky, and right before COVID, November of 19, I left and went to back home to Texas, joined Unchained, and built out that business. So I was one of the first employees, and then one of the first clients and then employees. And we scaled that business from effectively like friends and family capital to about $10 billion by the time I left, raised hundreds of millions of dollars, hired over 100 people, and through that process, really got a taste for how you build financial services in this ecosystem, how you build on principle and relationships. And ultimately, that there's a large gap that exists in this market that nobody's really serving. And it's roughly, in our estimate, and there's a lot of on-chain data, about $1.4 trillion in Bitcoin sits on those little plastic devices. And as we would go through these conversations, there was always a ceiling for the individual, and then definitely at the corporate and fiduciary where they loved us, but they're like, man, I can't do this. They would even really want to. You'd have the evangelists like us two, or individuals that we know, but they would come with their tails tucked between their legs after they went to chat with their board, or we would never hear from them again. Because once you think about hardware devices, seed phrases, segregation, what happens if a tornado hits, wildfire, pass away, if a employee leaves, you got to burn everything and restart it generally, because if they have a piece of cryptographic material, they can, move the assets. And so in parallel to kind of seeing this gap in the market where we knew people shouldn't leave long-term material amounts of Bitcoin on a third-party exchange, just empirically based on data of the losses, I also understood that where Bitcoin was going to scale, it couldn't have a single custodian, but also individuals to really commercialize the space and get millions and billions of people. They're also not going to hold all their wealth underneath their metaphorical mattress. And so that kind of was the launching of Onramp. The thing that coincided with it, that was really the linchpin, and individuals, this is more for people listening, if you think this market structure has been built out, it's nowhere near it. It's just starting. Was building in this space, we've been raised, or we've grown up to see that not only TradFi, but the higher ups kind of always know what they're doing. They're leading the market. We could take a little small piece of the world and maybe carve out a niche or make some money. And I found out that just wasn't true. And it definitely wasn't true in the digital asset space, because everybody that was the darling effectively blew up in 22. So you got 3AC, Genesis, DCG, FTX, Celsius. I mean, you can go for more than 10 fingers and probably 10 toes on just things that didn't exist anymore. And we took a conservative approach, and we never lost clients' funds. We never lost on the lending side. And so I knew how to build a business the right way. And it was that missing piece of how do you actually commercialize that, where we were able to go to $0 to $10 billion while shipping devices and going to drive around Texas and get on calls, spend 8 weeks in onboarding, where now we can onboard somebody to multi-institution custody in about 8 minutes. And so I'll pause there because I know that was a little bit of a rant, but can jump into wherever you want.
Bitcoin custody is evolving, and Onramp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, Onramp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, Onramp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. Onramp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, Onramp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin treasury phenomenon. Join us May 27th through the 29th for Bitcoin 2025 in Las Vegas. Use code KOTZ for 10% off tickets. Can you walk through where Onramp is today as far as like the flagship product and then the rest of the menu? And then maybe that would be a good segue into what we're announcing today and this week.
So I'll pull up on my screen for anybody listening. What I'm pulling up, and this is really always fun to talk about. I usually talk about it behind the scenes with clients and folks that are interested in our business, is effectively a screen that shows the two types of custody that exist for Bitcoin and digital assets, but ultimately have existed for every asset and for every asset for thousands of years. You have self-custody and third-party custody. And third-party custody has worked for assets because generally when you think of stocks, bonds, and other financial instruments, they're effectively a ledger. And if anything ever happens to them, you can always reverse that transaction. Somebody logs into your bank account, checking account, hacks your Gmail, like you can get access to that. Now, self-custody, again, individuals generally in Bitcoin will liken or claim that there's this novel thing about Bitcoin and self-custody. I'll say the novel thing is you can hold a lot of it in your hand versus gold, but it's still very similar. And so there's a common trope that comes into this space that because we have now the version of self-custody of a digital bearer instrument, we never need a financial intermediary. Everybody wants to be their own bank. And that's fundamentally not true because we already have historical precedent for thousands of years. There's a reason why we use intermediaries, financial institutions to coordinate economic activity so people don't rob our houses. So this is just not fully widely understood. But what the kicker is the reason why $1.4 trillion, about 70% of the total Bitcoin market cap sits on these little ledger devices is because historically that was the most sophisticated way to make sure you didn't lose the assets by taking them offline and severing that internet connection. And so to put a little meat behind it, this is kind of the reality is about $700 billion total has been lost in 15 years. And we get like super kind of sedated with numbers getting thrown out, given the amount of liquidity that's been injected in the system. But to contextualize what $700 billion is, the GFC had that amount of liquidity injected in 2008 to stop the deleveraging event. And that's what's been lost, just evaporated. And why I share this with you is because this is what keeps our friends and families out of the space. It's not that they don't think Bitcoin's interesting. Bitcoin's actually not that interesting not that hard to understand once you know there's only 21 million. The problem is that everyone thinks it's a Ponzi because they ultimately feel they'll end up on this screen because the common trope is from a grandmother or friend. It's like North Koreans are going to take it or it's going to end up in a landfill. So they either never allocate or they allocate such a small percentage and it's usually risk capital. It's not like an actual store of value. And so that's like the key idea here is that everyone knows that's been holding Bitcoin long enough. Their life gets easier when you hold a harder asset and can have better purchasing power and just do more in the world. The problem is nobody knows how to hold it long term through all of this because they don't have a good form of custody. And so that ties into our effectively our flagship product that we launched. It was November of 22, so close to 3 years now. And it's ultimately multi-institution custody. It's super simple actually to understand. It's instead of having you deal with self-custody, how do you go down the rabbit hole and understanding seed phrases, hardware devices. And by the way, that's easy to understand. The hard part is putting all of your capital there. That's the hard part. It's easy to put $100 on 12 words. It's a different thing to put 50% of all your money. That's the thing that gets missed in this industry is it's not hard to self-custody. It's hard to self-custody when all your money's on there and somebody, robs your house or you get hit with, wildfires like that were in California. But the other side of it, it's very easy to buy via a third-party exchange. The hard part is historically people have ended up on that losses screen. So what multi-institution does is it simplifies the process while 10xing the security. And so when you log in or set up via part of this announcement is now self-onboarding's live because historically to get this amount of robust security, you literally had to take, again, 2 to 8 weeks. So there's like now 10 collaborative custody providers out there. I would encourage anybody that wants to learn about self-custody to take a look at it because it gives you ultimate power, but there's a lot of responsibility. And that's where people generally hit the ceiling on how much they can allocate to it. And so what we've been able to do via our partners, BitGo, CoinCover, and then OnRamp is when you onboard, you're able to build a multi-institution wallet where all of those keys from each of those institutions are offline, segregated in bank vaults. They're sharded. It's everything that's wrapped around institutional security that like a MicroStrategy we have, but you get it 3 times. And you need 2 of 3 of those custodians to sign on your behalf. You are the director, and you have to do video verifications with independent institutions before those assets ever move. And so it's really transformative and effectively democratizing the ability for people to get material wealth in the space without having to do 3 years of legwork on how do you actually secure this.
When I first met you guys, I knew, of course, what it was like to buy Bitcoin on an exchange. Was familiar because of following the story of the ETFs, right? The spot ETFs coming to market. Became more familiar with self-custody through people I had met that are working in that space. But I had not heard about or realized that multi-institution custody was even an option. And what's so interesting about that is you never know, just sharing what you do, right? What you're excited about when you share it with someone, just very naturally where that's going to go. And in one case, the one gentleman I just shared what was going on, I'll have to ask him, but I would think it'd be far-fetched to say that this guy was not aware of ETFs and was not aware that you could just go onto an exchange in the US or some other country and just buy Bitcoin, right? It's all kind of very obvious and heavily marketed. So when I was telling him what was going on and said, hey, I'm working with OnRamp, it was just a very natural progression for him. And it was almost like, for me, it was the first time of like, not even trying to direct someone in a certain place, but I think for him, it was just like the first time that I had seen someone actually just go from near zero to, oh, here's this well-constructed solution that makes a lot of sense for all these reasons. And you can just kind of like walk someone right up to the gate and say, here you go. It's all built and ready to go. So yeah, that was a really unique experience for me.
Yeah, I mean, that resonates because that's ultimately when we work and talk with clients, that's the thing that once people get peek behind the hood, they love it, right? Because at the end of the day, it provides them peace of mind. That's the core thing that like we're working on and what we deliver is peace of mind for individuals. Part of the announcement we'll share is peace of mind is lacking across the board, kind of just in society and for humans in general. And what I mean by that is individuals, if they're being debased and everything's getting more expensive, whether they just can't, buy less eggs every week, or even it's a high net worth that retires, they're losing the peace of mind because they're on a rat race and their purchasing power, like um, their retirement is becoming worth less. Their trips are going to get less, less that they can buy with their retirement, or ultimately what they leave their loved ones. And then once they get past that, well, let's just say they figure out Bitcoin. Well, most people don't go too far down understanding Bitcoin because, again, it goes back to it's always fleeting. It's a speculative asset. Nobody really focuses only on Bitcoin, which is a key theme of OnRamp. It's like we go very deep on the education. That's a core like sub thing that's super important because most institutions, high net worths, end up as exit liquidity in the space because they come in trading the momentum, similar to most meme stocks and meme assets. And then when everything crashes, nobody's there to tell them why it crashed. And they blame it on Bitcoin. It's not really Bitcoin, it's the market. And if you're well educated, you're actually happy to buy when the price crashes. And so that peace of mind and helping them get off that rat race. But then at the end of the day, then there's all the peace of mind that's lost once you get a material position because you're always worried as it grows. What happens with the third party exchange, social engineering all day long? There's no shortage of bad actors looking to take it the first time a digital bearer asset. And then if you figured out how to take self custody, well, it works for a while and then the price doubles and triples because that's where all my previous firm, RAUM, came in, was in two, I call it the carrot or stick. Either the price doubles or triples, and that's the carrot. And now you get uncomfortable because it's the same amount of BTC, but now your legacy is on the hook of, is my family going to disown me? Are they going to roll over in their graves if I lose this thing? And then the stick is, well, God forbid if I mess this up, I'll never be able to live with myself because what 10 Bitcoin at 10,000 is fundamentally 10 different than 10 Bitcoin at $1 million. And so then you get the peace of mind from not only, having redundancy and fault tolerance with multiple institutions safeguarding it, but then we end with a peace of mind where your legacy and your generational wealth can be handed down, because that's where a lot of clients come to us is they say they're comfortable with almost everything except for how does their family access the BTC if, God forbid, they get hit by that metaphorical bus or an actual bus. Um, and so that's really where individuals, like you said, that you referred to us, when they see it, it's very intuitive. You see three institutions, you recognize multi-sig is open source. It scales proportionally because this is very exciting when it comes to other financial products, whether it's lending. I will make anyone a bet. They can reach out. We can talk about it publicly. Like, this is how all ETFs will be held long term. It's how MicroStrategy and all corporate treasuries will be held once the market is educated. Because at the end of the day, when you're holding fiduciary, you're a fiduciary and you're holding shareholder capital, the like from a regulated perspective, they're going to require it. And let's say you have $1 trillion. Trillion sounds like an insane number, but Coinbase is, I think, I don't know, 500 to 700 billion in total crypto assets, and they'll be at $1 trillion. As the price runs up, the market's going to require that a single institution over time, as they fail and things happen, can't just unilaterally lose all the assets. And so we've had ETF providers on our shows, and behind closed doors, they'll say this thing's bulletproof. The problem is that it melts brains because now you have to explain to somebody why nobody has unilateral control of the asset. And you have to explain, that Bitcoin doesn't sit anywhere. It sits on a blockchain. But that's all the exciting stuff that we're working on, and where we found a lot of traction where clients are coming in. And the fun part is, as the price rises, the increase in flow of opportunities. We're talking with the largest institutions to hold keys in our forums, looking at lending products. We have tax advantage accounts today, the ability to trade, business accounts. We just see that market growing as people get educated. They're going to realize that, again, Coinbase account doesn't make the most sense if you're going to put 25% or 75% of your life savings, but the same side, a hardware device only, scales so much when it's that amount of capital. The other thing I'll share is the way I think about this. The best analogy I have is like the browser in 1995. Mosaic was the browser that Mark Andreessen helped co-found, and it really democratized access to the quote unquote World Wide Web. It opened up, the web to everyone. Before that, you had to set up, a modem, a router, and it was only the tinkerers, the people really interested, to go in, and they were able to, reap outsized returns, whether it was knowledge that they got, businesses that they started. And I think of where we're heading with this, like corporate treasury adoption, mass global adoption, and then also something like multi-institution custody. the fact that we've been able, from a technological perspective, get 10x better security at 1/10 the price of any other custody solution, it allows for anybody to come in once it's understood as a standard. And most people won't have to over time. It's just the same way nobody knows how a browser works. You click the button and it works and gives you access to everything. That is going to open up the opportunity for everyone to get material exposure to BTC. And it's at this great inflection point, because as the price is rising, everyone's going to seek out the best products, and they're going to seek out exposure. But again, over time, we've seen that centralized custody of a digital bearer asset that has a fixed supply doesn't make a lot of sense, because you end up at honeypots and you end up with people attacking it. And the other side is, all the way from the mom and dad that are trying to struggle to make ends meet to the billionaire. They don't have time to figure all this stuff out. That's the hard part about all this Bitcoin, digital assets, custody. You just need standards and financial service firms that are customer centric and have brands and reputations. And then the beauty is, you don't actually have to, anybody building in Bitcoin that's really building in Bitcoin, they always take themselves out of the position to lose clients' assets. That's a low key thing that doesn't get talked about enough. That you never want to be in position to go to sleep at night and you lose all your clients' funds. And nobody can effectively say that. If you have a centralized custody solution, whether it's bad actors, collusion, malfunction with how you set up the custody, whatever it is, you can't say it's bulletproof. The beauty of what we set ourselves up to do is that there is no single counterparty that can lose the assets. You need multiple institutions to effectively collude or fail. And we actually have Lloyd's of London insurance around that. So it just changes the whole dynamic and risk profile around getting the allocation. Goes back to the effectively thesis on what do you underwrite Bitcoin's potential appreciation, and then you remove all of the friction point and assumptions on will it actually be there in the future, which ties into like bit bonds and everything else. That I'd make the case that you can't really execute on all these other strategies until you get rid of the execution risk around custody.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today.
Europe's richest Bitcoin heritage site, Prague. BTC Prague, the biggest Bitcoin conference on the continent.
Join us June 19th through the 21st for Bitcoin Prague 2025. Use code KOTSMAN when you buy your ticket at btcprague.com. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Can you touch on early riders for a few minutes? What is it? How did it come about? And what is the what's under the umbrella today?
Yeah. So part of the story that I kind of glossed over was, while I was at Unchained, helped set up one of the larger Bitcoin focused investment funds. And so had a lot of background in, even previous to Bitcoin, I was very deep into the technology world and venture capital, just interest, and always assumed I would get into the space at some point. While we were building Unchained, the thing that I really found out was, especially again, going back to 18, 19, 20, there was very little interest in the Bitcoin only space. So it was very hard to raise capital, very hard to build a Bitcoin only business. And I knew we were doing good work. And I always took a liking to, well, it's helpful to bring in capital to go and, invest in companies that are doing the right work. So I linked up with a venture firm, and part of when individuals come into this space, you end up building deep relationships with them, and they generally don't go all into BTC. So what they'll generally do is take their position, and then they want a seat at the table to see what's being built. how do I get access? How do I invest? How do I see, who's building? Because they always, and this is the thing we should touch on, is that most individuals, once they get this space, and I know your True North crowd probably really feels this, is they're kind of like, feel like they're almost living a lie. They're living the old world and they're trying to figure out how do they get into this new world. And so we raised that fund, and what I found doing that was a lot of the good ways to do things and also a lot of just like the bad ways. I think ultimately liquidity drowns out all soundness in decision making and fundamentals in a business. I saw this at WeWork, and then I saw this coming into the Bitcoin space, because when you get venture capital money, you're told to just grow as fast as you can. And that hasn't been a good strategy in general, but it's even worse strategy in Bitcoin because it's on accelerated business cycle. That's how I think about Bitcoin market cycles, just accelerated business cycles. So you go up and then you go straight back down. And if you build in a way that the old school VC world tells you to, well, you're effectively just going to cut your business in half because you go higher in the bull and then you have to fire everybody in the bear. And so, long story short, left kind of both firms in 22 after I just saw everything kind of felt a little off from the Bitcoin side, but also just the amount of liquidity. And I thought we were onto something very big at OnRamp. I looked at Grayscale and their business and providing, 600,000 BT sat in that product, the trust, and it was objectively had product market fit to give people exposure pre-ETF, but it was objectively a bad product. And assumed that if we could get anywhere near there, we would be really printing Bitcoin from a revenue perspective. And so made the concerted decision that we would, take our own capital to build the business. So most people would think that's crazy. You're in a bear market, you're spending your own capital to build a business and your own Bitcoin. And what I found was that it made us the most discerning allocators, because that's all an entrepreneur is. It's an allocator of capital to produce more capital, positive return. And found that this made us the most efficient business. I won't say it's a 10 out of 10, but much closer than any other business that's building on a dollar standard. Because ultimately what happens on a dollar standard, for any investors out there, they'll recognize this, is LPs are always trying to get rid of their dollars because they're always fleeting. It's why everyone's always trying to seek yield, because at the end of the day, everyone knows you're a sucker if you hold dollars. So you're less discerning on who your capital manager is or your asset manager. Even if you feel like you're doing the diligence, it's never at the most optimal because it's dollars. They make more of them every day. And then if you're the GP, well, you're always trying to raise more dollars because you want a larger fund. You want to deploy those dollars as fast as possible because then you can raise a bigger fund. And so those dollars are always fleeting because if you raise them, that's your mandate. And also dollars are made more of every day. So you got to get them out in the market. And then again, the ultimate allocator, which is the founder, gets those dollars from the VC. Doesn't matter if it's a traditional VC or Bitcoin VC. And then they're told, go run as fast as you can. Because what happens is most venture capitalists have never built anything. So they don't know any model other than what was taught in like corporate finance or an MBA and said, hey, or like, this is how you scale. You got to hyper grow. And so then the entrepreneur gets told, go hire, go build. And then again, that accelerated market happens. You fire everyone and you just like literally, destroyed all your investor capital. This happens in the existing traditional venture space as well as this happened in the Bitcoin space. And so I saw all of that and ultimately said, okay, well, when we build this business, we're going to build fundamentally different. And while we were doing that, I was like, oh God, this is how all capital formation will be done in the future. Because this is the most efficient way to deploy. It's not to say you don't spend the money. It just means that you're ultra discerning and efficient with how you spend, to where how you hire, to how you think creatively around that, to how you build the business, to how you think about your liquidity partner, to the way you build custody. And it's what's known from anybody that's a builder is constraints are the ultimate like breeding of creativity. It's how you can actually, this is how like societies are built on, as like constraints. And so long story short, having the experience in the venture space was realized, well, this is how all businesses will be built. Specifically, the businesses that are built this way will outcompete the others that are built with the fat and bloat. And then also just realizing from a very first principle perspective, individuals, all society is made up of individuals. And if me and you and everyone listening starts to determine that Bitcoin is their hurdle rate, Bitcoin is the thing that they're trying to make more of. It's not to say they don't spend the Bitcoin. That's what money is meant for. It's optionality on the future. But it's meant that if you're going to spend the Bitcoin, you need to know that you're going to make more of it. You're going to get more return back to you. And so coming at from those two directions of it's just an economically rational thing where we're heading once everybody gets this knowledge that Bitcoin is the thing and that's the hurdle rate. well, then it's the natural thing to build a business that's going to, make sure that it outcompetes or returns more BTC. And on the other side of that, that all businesses will be built. And so that's how early riders came to be, to the first, and I think only Bitcoin denominated fund. Very often people will say, man, that sounds risky. That's in hard mode. But when we break down how we can achieve that and what we do fundamentally to do it, everyone's like, oh, well, then that makes complete sense. But it usually has to be explained to somebody, because generally people aren't actively building, they're allocating, and they just see Bitcoin's CAGR and they're like, how could you ever do that? But when you're building valuable businesses, it's not hard to return more money than you put in it. You just have to actually have, value to bring to the world and creativity on how you deliver that.
Makes sense. Do you want to touch on any of the other, I don't know if you'd call them portfolio companies under the early riders umbrella, and or kind of where we're going from here on the on-ramp side?
Yeah, for sure. So on the early riders umbrella, the reality is there's a notion of like alpha or axis that's talked about in the venture community, whether it's, again, traditional venture or Bitcoin, and it's all BS. Like, everyone will take everyone's money because that's what they need. They need to build businesses and they go out. So everybody sees the same deal. You can look at all the portfolios and they pretty much have pretty static overlap. And part of the reason for launching the fund was not only do we discover kind of like what we talked about in the hurdle rate and capital allocation, but the reality is we have just too many ideas. And the reason we have too many ideas is because what makes early riders unique and Onramp, and why I think we have a chance to be a very, very large company in this space moving forward, and what I miss seeing in the traditional Bitcoin space is, and this goes back to all technological cycles, is usually when people come in, they're the tinkerers first. It's the people that are interested. And the way I liken it is somebody that likes to cook, maybe a great cook, but that's fundamentally different than starting a business and turning it into a franchise and scaling it. It's very similar to most technological innovations, and specifically with BTC. Somebody gets Bitcoin in 2012 or 2013, had certain things in their mind that were a little off. And so they may be great individuals, but to like run and sustain a business, they're fundamentally different. And so the easy way to put it is they're building products for themselves versus for the mass market. And so what was lacking, and something we made a concerted effort when building our partner team and also our advisor team, which you're included on, and also Onramp, is every individual comes, and I say everyone, has 10 plus years of professional experience, and then they layer in a deep understanding of Bitcoin, which is important because they're taking a mental model of the existing world and then they're layering in a very bespoke understanding of BTC and fitting that in, because there's a nuance that we're not going to recreate the wheel of Bitcoin. We're just repurposing it. We're going to naturally infuse Bitcoin into other products and services. So you need to know how the existing world operated and worked and how Bitcoin comes in. And so by doing that and all day long building the market, we actually have the definition of access, because while we're building, we're spotting all the gaps. We're talking to entrepreneurs that want to join our firm. We're talking to builders that are saying we need X, Y, and Z. And then the idea is that we now start to place bets in the market. One of the very first ones that we placed was with Acropolis, who you're very familiar with. They're the only, to my knowledge, corporate treasury firm like on capital markets advisory with Bitcoin, and then also built on multi-institution custody. We made a concerted effort to build that versus or invest in that versus build it at OnRamp, specifically because, again, financial services require they're very bespoke and require a particular not only strategy, but understanding of the market. And so you're not going to have everything you're not going to have like Coinbase that delivers services for everything in Bitcoin. They're going to start to get very specific. So Acropolis was one, seen insane demand given the amount of interest in corporate treasuries. We have Onramp MENA, which is the only Bitcoin-only Middle Eastern firm in North Africa, Middle East and North Africa. They're working with the central bank to get licensed currently. And then Flash is a payments company. And then obviously Onramp is part of that portfolio. And we're looking at a few TradFi opportunities in the RAA and / gold of Bitcoin rails.
Got it. And I guess as we wrap up, anything on the Onramp front as far as where we go from here that you want to touch on, and then kind of wrap up from there, I guess?
Yeah. So part of this pod and what we're super excited is we referenced the peace of mind earlier, and we bring clients peace of mind that are either starting to allocate or allocate material size. The peace of mind that still lacks in the world is people have dollars or equities or bonds, and they're naturally starting to turn negative yielding. They need access to BTC. And so we're announcing today, this will come out, an on-ramp to on-ramp. So we're going to bring out the industry leading Bitcoin only exchange at the most cost effective prices. So right now it'll start if you onboard it. Actually, and this is part of what's exciting is, so if you sign up by the end of June, you're actually going to get no trade fees all the way until October. But once you have trade fees, it'll be 75 basis points. And I'm going to make a commitment that if anybody wants to or tries to undercut our fees, we're going to be less than them. And the reason why we're going to do that is ultimately because our business model isn't reliant on just trading. This is a big part of the market that we see as a gap that everyone kind of conflates or kind of like hides, like the reality that custody has been subsidized by too much money. So usually custody is free at an exchange because they want you trading. So it's baked into the trading fees. Or if you go to one of the collaborative custody providers, it's usually free or very close to free because it's been subsidized by venture, but there's risk embedded in all of that. And so we have a fundamental business that spans not only across multi-institution custody, but IRAs, lending, trade, insurance. And so the core idea is that if somebody just wants to get started with OnRamp or into the Bitcoin ecosystem, or maybe they're already buying on somewhere else and they just want to come in and get industry low fees, that's the peace of mind to start for themselves or friends and family. And then the idea is it's basically all under the sun umbrella for when you're ready to upgrade to multi-institution, you want your segregated account on chain with everything that we talked about earlier in the pod, you'll be able to get that. So we're pretty pumped about the excitement. And you can tell us on the pod, what's your, we're going to have a referral code for you. So if somebody comes in, they know that where they came from. And you want it to be Treasury or is it Kotzman or you got something more interesting?
Yeah, usually it's just KOTZ, KOTZ.
Okay, so you heard it here. If you use a KOTZ, you're going to naturally get you'll get no trade fees until October. And then Kotzman will be taken care of on the back end for listening and signing up with his referral code.
I mean, it sounds like a win-win, right? You're going to buy Bitcoin anyways. Why are you going to pay more than you need to get it where it needs to go?
Yeah, that's the big thing is historically people in Bitcoin have had to play hot potato with the assets. You either start at one exchange, then go to the next one, then go to the next, single sig to collaborative custody to go into ETFs because they became too much. The idea is that you have peace of mind on your counterparty when you first start buying and knowing you don't have to move them. And God forbid something happens to you, your family will be able to recover them via the multi-institution process to get them in the beneficiary's name.
I think everyone that listens to this pod hopefully knows that it's onrampbitcoin.com or my favorite website, onrampbitcoin.com/Kotzman, right? That's my preferred website. But where can people follow you, interact with you, and any other resources that you'd like to call out as we kind of wrap up here?
Yeah, I think you called it. onrampbitcoin.com, on Twitter, mtanguma, emails michael@onrampbitcoin.com. If you want to shoot a note, we're super responsive. We're very focused on client services and relationship building. So you'll always get somebody to talk to, whether it's support or a consultation to understand what we do if we're a right fit. And a lot of this, what we're building is ultimately for folks, friends, and family. I think a lot of individuals that may feel sophisticated in this space may not need our services, but their friends and family will, that they want peace of mind that they're taken care of. And so our goal is to take care of them. And then our understanding of the market as the price rises, what we build is we'll start to make more and more sense. And then they'll be ready for our services as well.
Awesome. Michael Tanguma, founder and CEO of Onramp Bitcoin. Thanks for your time today.
Appreciate it, Tim. It was great.